2023 has been without a doubt a year of banks' failure, out of control spending, high personal debt, high inflation, and higher interest rates, which has exacerbated the housing affordability crisis.
Regional banks are surging today, led by First Republic. Shares of the struggling bank are up about 40% after losing nearly half of its value during trading yesterday.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
The Silicon Valley Bank collapsed on March 10 after a run on deposits doomed the tech-focused lender's plans to raise fresh capital.
Meanwhile, Signature Bank marks the third largest bank failure in U.S. history.
The collapse of three U.S. banks, First Republic Bank, Silicon Valley Bank, and Signature Bank, has resulted in the biggest banking failure since 2008. And unfortunately, despite interventions and the mega merger of Credit Suisse and UBS, global banks still terminated the most jobs since the global financial crisis of 2008.
Yields are going higher, thesis, and that's job cuts across banks. They're nearing 60,000. I know it's going to be a big surprise, but a lot of them are most of them in European banks.
90% of them, according to this Bloomberg story.
This article by Financial Times entitled "Banks Shed 60,000 Jobs in One of the Worst Years for Cuts Since Financial Crisis" says that global banks have eliminated more than 60,000 jobs in 2023, making one of the heaviest years for cuts since the financial crisis and reversing much of their hiring as they emerge from the COVID-19 pandemic. He also says investment banks offer a second consecutive year of plummeting fees, and deal making and public listings dried up, leaving Wall Street trying to protect profit margins by reducing headcounts. Elsewhere, the takeover of Credit Suisse by UBS has already resulted in at least 13,000 fewer roles at the combined bank, with further big redundancy rounds expected in the years ahead. There's, quote, "There's no stability, no investment, no growth in most banks, and there are likely to be more job cuts," said Lee Thacker, owner of financial services headhunting firm Silvermine Partners. 20 of the world's biggest banks got at least 61,905 jobs in 2023, according to the Financial Times calculations. That compares with more than 140,000 jobs slashed by the same lenders during the last global financial crisis of 2008. And here's the list of banks at the top five. UBS Credit Suisse, which has slashed almost 13,000 jobs. The second global bank, Wells Fargo, that has slashed the most jobs, the second one that has slashed the most jobs at 12,000 jobs. Citigroup at around 5, and Morgan Stanley just right around the same, past 4,000. The Financial Times used company disclosures and his own reporting to compile the data and did not include smaller banks or minor staff cuts. So the overall total of job losses in the sector will be higher. So they're telling us that even though that's a lot of jobs, there are likely to be a lot more jobs because they have not included some of the minor staff cuts that they have done. So in many of those instances, the lenders are rowing back on hires they made coming out of the pandemic when pent-up demand and deal-making sparked a war for talent between investment banks. In November, UBS disclosed that it had already cut 13,000 jobs from the combined group, leaving it with a total headcount of 116,000. The second biggest cutter of 2023 was Wells Fargo, which this month revealed it had lowered its global headcount by 12,000 to 230,000. And the bank said it had spent $186 million on severance costs in the third quarter alone, with 7,000 jobs. The other big Wall Street lenders resumed their annual reduction in force redundancy programs in 2023, having skipped a few years since the start of the pandemic. While most of the staff reductions at global banks this year have affected less than 5% of staff, the UK Metro Bank has announced plans to cut a fifth of its workforce. So we're seeing that all these job cuts are taking place at a global scale, and how these banks are cutting all these jobs in order to merge, perhaps to make the entrance to universal basic income have been trying to roll out for a while now. So we'll see what happens this year, but definitely job losses are going to have an impact on the real estate market and the economy as a whole. While the financial meltdown is happening with banks merger, job losses, and the Fed's trying to stabilize interest rates by promising that 2.0% inflation will bring interest rate cuts next year. As a result, we are seeing the dollar devaluating, while other safer investments are gaining ground. Today, for example, we saw that the Swiss franc spike above the July heights to his strongest against the US dollar since January of 2015. Gold spot jumped to $2,080, and the dollar is dumping to its lowest level since July. Unfortunately, it's looking like the massive capital relocation is taking place into safer investments as the dollar is losing ground. And 2024 might be the year that UBI, Universal Basic Income, gets implemented as further erosion of our current financial system takes place. I'd like to learn your thoughts. What are your thoughts about these? What do you think all of these financial erosion taking place now will be next year? What will be the effect? Do you think we will continue to see this in 2024 and the years ahead? And I wanted to remind you too that whether you are selling or purchasing real estate in 2024, please contact me to help you navigate through all the ins and outs of the home buying or selling process. Whether you are in the San Francisco Bay Area, in the Valley, or adjacent neighborhoods, or you would like to relocate somewhere outside of California, we provide real estate relocation assistance nationwide by matching you with a real estate agent of your choice. Just click on the link below and I will be in contact with you. And I ask you to please like and subscribe to my video and just watch for any further information that we might have for you.